Wall Street wants you to believe investing is complicated, but the truth is, just 4 ETFs cover almost every strategy you'll ever need. Today, I'll break down exactly what they are, how they work, and which one fits your financial journey. Trust me, you don't want to miss number 4. Let's start. 1. VNQ. VNQ, the Vanguard Real Estate ETF. This gives you access to U.S. real estate, office buildings, shopping centers, apartments, even warehouses. Because real estate feels real. It's a physical asset you can imagine. No confusing financial jargon, just properties generating rental income. VNQ investors love the dividends. These payouts come regularly, and for many that feels like collecting rent checks without having to deal with tenants, broken sinks, or property taxes. On top of that, real estate often moves differently from the stock market, which means it can add a layer of balance to your portfolio. In other words, VNQ can be your steady cash flow machine in a world where stocks go up and down like a yo-yo. So, it's perfect, right? Not really. When interest rates rise, real estate values can collapse overnight. Empty malls, half-filled office towers, and crashing property prices can eat your portfolio alive. Those steady dividends can vanish in a heartbeat if tenants stop paying or properties lose value. VNQ can look safe until the roof caves in. So if even real estate, the safest sounding asset, can crumble overnight, where can you look for faster, higher growth? What if there's a market that's still young, still expanding, and full of untapped potential? Into places where the next financial giants are just being born. Here comes our next EFT. 2 EEM, which invests in developing countries like China, India, and Brazil. Emerging markets are like the wild frontier of investing. These are places where economies are booming, populations are young, and industries are just taking off. Imagine catching a ride on the next global giant, like buying into China's version of Amazon before it takes over Asia, or investing in India's tech scene as it powers 1 billion people online. That's the kind of growth story investors dream about. And there's more. EEM gives you global diversification. Instead of putting all your eggs in the US basket, you're spreading risk and tapping into markets that often grow faster than developed economies. Plus, when the US market slows, emerging markets sometimes surge, giving your portfolio a potential edge. But the danger is political chaos and financial instability. One election gone wrong, one government scandal, or one currency crisis, and your money can disappear faster than you can refresh your app. Weak regulations mean less protection for investors, and sudden capital flight can turn a promising market into a disaster zone. So yes, emerging markets promise explosive growth, but they're also a ticking time bomb. If you're tired of the chaos, maybe what you need is stability. What if you could own a single ETF that captures the entire heartbeat of the US economy, from Apple to Coca-Cola, and sleep peacefully at night knowing you're holding America's best? It's the next ETF that will exactly give you that. 3 S&P 500. Now we get to the legendary SPY. This ETF tracks the S&P 500, which means you instantly own a piece of America's top 500 companies: Apple, Microsoft, Coca-Cola, Amazon, Johnson & Johnson, and so many more. It's the perfect combination of simplicity and power. You don't have to spend hours picking stocks. By buying SPY, you're saying, I believe in the long-term growth of the US economy. And history has rewarded that belief. Decade after decade, SPY has delivered strong, steady returns. It's also incredibly diversified. Tech, healthcare, finance, consumer goods. You own it all in one single ETF. That means if one sector struggles, another often balances it out. On top of that, SPY is super liquid. You can buy and sell it anytime, without worrying about big price swings or hidden fees. SPY is a wealth-building machine for the patient investor. Put money in, let it compound for 10, 20, 30 years, and you're almost guaranteed to come out ahead. It's not flashy, but it's one of the safest, smartest ways to grow your money. But when the US economy crashes, SPY falls with it, hard. In 2008, it lost over 50% of its value. Imagine watching half your retirement evaporate. And because it mirrors the market, there's no escape. When America sneezes, your portfolio catches pneumonia. It won't protect you from recessions. You ride the storm whether you like it or not. So if the safe and steady SPY can still break your heart during a crash, what about chasing the ones that skyrocket even when the world shakes? Let's enter the high-voltage world of technology, where innovation drives wealth and the future itself becomes your investment. 4. Invesco QQQ. QQQ, the Invesco Nasdaq 100 ETF. This one is packed with the world's biggest innovators: Apple, Microsoft, Tesla, Google, Nvidia, Meta. Basically, the companies that are building the future we all live in. It's like holding the keys to the engine room of the modern economy. Tech is where the magic happens. AI, cloud computing, electric cars, semiconductors. And QQQ gives you front-row access. Over the past decade, QQQ has outperformed SPY by a wide margin. That means more growth, more wealth, and faster results. What makes it even more attractive is familiarity. These aren't obscure companies you've never heard of. They're the brands you use daily: your iPhone, your Google search, your Microsoft software, even the AI recommending this video. When you invest in QQQ, you're literally investing in the companies shaping your everyday life and driving the world's future. Most importantly, compounding growth in QQQ has created some of the highest returns available in mainstream ETFs. Long-term investors who stuck with it have built life-changing wealth. It's the ultimate growth story. It's the growth superstar, but it's also a high-speed roller coaster with no brakes. Tech stocks can soar, but when the bubble bursts, they don't just fall, they crash. In the 2000 dot-com bust, Nasdaq stocks lost almost 80%. That means if you're in QQQ, you could see your portfolio melt in months. It's the rocket ship of investing, but rockets don't just fly, sometimes they explode. So, from real estate to emerging markets, from America's backbone to tech's rocket ships, every ETF has its promise and its peril. The real question is, which one matches your goals, your risk tolerance, and your dreams? Let's explain which EFT should you choose that would be best for you. First, VNQ. If you're someone who craves steady income and dividends and you like the idea of owning a slice of real estate without being a landlord, VNQ could be your pick. The benefit is those juicy regular payouts and portfolio diversification. Next, EEM is for investors who want global exposure and are willing to take on more risk for the chance at explosive growth. EEM lets you tap into the fast-growing economies of the future, like India and Brazil. It has high growth potential and international balance. Then, S&P 500 ETF. Perfect for people who want a set-it-and-forget-it investment. You don't need to research individual companies. You instantly own the 500 strongest in the US. The benefits are stability, diversification, and decades of proven wealth-building power. Lastly, QQQ is for investors who want growth, speed, and innovation. If you believe technology will continue to dominate the future, QQQ is the ETF to supercharge your portfolio. The benefits are massive long-term returns, access to the world's top innovators, and exposure to industries that shape everyday life. So here's the summary. VNQ is for the income seeker, EEM is for the risk taker, SPY is for the long-term wealth builder, and QQQ is for the ambitious growth hunter. The key is knowing your personality and your goals. Because the right ETF for you isn't just about returns. It's about matching your investment style with your financial journey. Which one do you trust with your money? Safety, global excitement, or high-powered growth? Drop your thoughts in the comments below. Don't forget to like, then subscribe, and hit that bell so you never miss insights that can make you smarter with money. Click on the next video to learn more finance and investment strategies. I will see you there. Bye-bye.